Hi everyone, my name is Sam Eddy. I'm the Chief Accounting Officer here at Eddy CPA Advisory and Solutions. Today I'll be going over our PPP loan forgiveness calculator with some sample data. Just to note that this template is based on the current application and guidance released as of June 26th. And as we've seen, there's been a lot of changes from the existing CARES Act. So if there are any subsequent changes, they would not be included in this version of the template. On June 16th, the SBA released the updated loan forgiveness applications, introducing a new easy form along with the updated full application. You are allowed to use the easy application form if you meet one of the following criteria. You are self-employed and have no employees, did not reduce the salaries or wages of your employees by more than 25%, and did not reduce the number of hours of your employees, or experienced reductions in business activity as a result of health directives related to COVID-19 and did not reduce the salaries or wages of your employees by more than 25%. With the easy form, there is less calculations required. So if you do meet one of these criteria, you will want to complete this form instead of the full application. Our template is based on the full application. However, you can still use the template to determine if you meet the reduction requirements for the easy application form. So let's begin going through the template. Firstly, I am going to provide a brief overview of each tab within this template, and then we will go through step by step the order in which you should complete the template in order to get all the information accurate. So firstly, I know there's a lot of tabs here and it can be quite overwhelming. I will do my best to describe everything in detail so you have a good understanding of how it works. So first up is the PPP Forgiveness Calc tab. This is really based on the first page of the full application and is the summary page that determines how much you will receive in forgiveness. I've also added in here in the key inputs field how to determine what your covered or alternative period is for the purposes of what period you're claiming forgiveness for. Obviously, that's an election that you need to make. So there's inputs here. The next tab is Schedule A. This is another calculation tab that's used to determine the total payroll costs and any salary or FTE reduction amounts. A lot of this will feed from the other tabs. There's only a few inputs here in regards to the FTE reduction calculation. Schedule A worksheet is a summary of the cash compensation average FTE and any salary reductions by employee. A lot of this as well will feed from the other calculation tabs. Next is the payroll cost tab. Now this is the primary tab where you will enter all your salary and wage information by employee for the covered period and any reference periods in regards to the calculation of any salary reductions and also for the wage reduction safe harbor calculations. Next, we have the owner pay. This is for entering any owner pay amounts that you're claiming for forgiveness. We have the non-cash payroll. This is where you're entering your amount spent on allowed non-cash payroll items, which includes employer contributions to health insurance, employer contributions to retirement plans, and employer state and local taxes assessed. We have our non-payroll costs, which include your business mortgage interest, business rent or lease payments, and utilities with these various categories that are allowed. And the final two tabs are in regards to the FTE. So here we have our FTE calculation and our FTE safe harbor calculation. Now these two may not apply, and I'll go over that in detail depending on if you meet any of the safe harbor requirements earlier in the calculation. So the order in which to complete this is mostly as it is shown here. A lot of the summary tabs in the first two, such as PPP Forgiveness Calc, Schedule A Worksheet, roll up from the other tabs. So the first one you're going to want to complete is this first section where you're inputting the key inputs. So here you're going to input the amount of your PPP loan, so how much you actually received in funding, the date that you received the funding, then also the date of the first date of the payroll after you receive the funds. Now, this date is for the alternative covered period. It is a new period that they introduced in the first loan application, and it is different to using the PPP fund received date. So you are going to select the basis for the covered period. So you are going to either select the date in which you receive the funds as the beginning date, or the first payroll period date as your beginning date. Now this will change the begin date for your covered period and obviously the end date. The other election you will need to make, depending on when you receive the funds, is the length of the covered period. Now, if you receive the funds prior to June 5th, 2020, you can either elect an 8-week covered period or a 24-week covered period. If you receive the funds after June 5th, you are defaulted to a 24-week covered period. So you will only be able to use this 24-week covered period. Now, these inputs will change your covered period, alternative covered period dates here, and these are the dates you're going to use as a reference for what dates you're going to pull in terms of your payroll reports. The other item you'll need to input here is if you received any EIDL advance amount, which was the grant amount up to a maximum of $10,000, you will need to input that here. This is due to this amount being taken off the forgiveness amount that you will be allowed by the SBA. The next tab you're going to want to look at is Schedule A. This is the summary that builds up the payroll costs. In here, you just want to primarily look at your FTE reduction calculation. Now, there are two safe harbors here that you can choose whether you meet them. The first one is if you had no reduction in employees or average paid hours. So if you have not reduced the number of employees or the average paid hours of your employees between January 1st, 2020 and the end of the covered period, you can select that you have no reduction. Now this will eliminate any reduction for any FTE average that you have between your covered period and the reference period. If you do not meet this safe harbor reduction, you will just want to select reduction. If you meet the FTE reduction safe harbor 1, which is if you're unable to operate between February 15, 2020 and the end of the covered period, the same level of business activity as before February 15, 2020, due to compliance with requirements established by the SHHS, the CDC, or the OSHA, then you can elect that you meet this safe harbor. Same principle that if you meet the safe harbor, you are removing any impact for any reduction for the FTE average. So if you meet either of these, you will want to select that you have no reduction or yes, and that will change that. If you do not meet these, you would want to select reduction and no. Next, you're going to have your Schedule A worksheet. Now we're going to skip this worksheet and come back to it later. This kind of summarizes other tabs. So we will do the inputs towards the end of this calculation. The payroll cost tab. Now this tab is going to be a primary tab for all your salary information. So I've listed all the reports up here that you will have to generate. Primarily, you're going to have to generate your payroll reports for your selected cover period and also for the reference period of Q1 2020. Now, if you don't meet the safe harbor requirements, if you have employees who you have paid less than 75% of the Q1 2020, and you need to look at whether you meet the safe harbor requirements for those employees, you will need to run these additional reports. So the first item you're going to insert here is the employee's name, their employee identifier. So if they have a payroll identifier that's unique to each employee, and then also the category. So if they are hourly or salary. Then your covered period, you're going to enter your gross wages by employee for the covered period. This is going to be determine a cap based on the 100,000 and then the covered period that you have selected. And then also the number of weeks paid and the total hours they worked in the period. Now this will determine, if we select our 8-week example, the average annual salary or hourly wage for the covered period. And that's going to be sort of what you're comparing to your Q1 2020. Now in your Q1 2020, you're going to pull the same information, put in your gross wages paid, the weeks paid, and the total hours to calculate the same measure of the average annual salary or hourly wage. Now, what it's going to do is compare these two amounts. So compare your average annual salary or wage in the cover period against what you were paying that employee in Q1 2020. Now, if the amount you paid in the cover period is at least 75% of the amount you paid in Q1 2020, then you meet the requirements to have no reduction. So you can see, for example, this first one, we had paid 83% of the Q1 2020 amount, so therefore there is no reduction. And you do not need to look at any of the safe harbor requirements for this employee. Contrary to that one, the second example, we've only paid 70% of what we paid that employee in Q1 2020. So we have a potential 5% reduction here in the salary that would cause a reduction. Now we would have to look at for this employee and look at the safe harbor requirements, which looks at comparing what their annual salary or hourly wage was as of 2/15 to the period from 2/15 to 4/26. If the amount you paid for the period from 2/15 to 4/26 is greater than 2/15, then you meet the safe harbor requirement. If not, you can compare to an annual salary or hourly wage up to 12/31/2020 or the date that you submit this application. So you'll want to enter that information in here, like we have for this employee here, where we have entered that they did not meet the first safe harbor requirement, but they did meet the second safe harbor requirement, where we paid them a higher amount later in the year. If you did not have any safe harbor, if they did not meet the safe harbor requirement, there is a calculation over here for the amount that will be reduced off your forgiveness, which is based on whether they're an hourly or a salary and the covered period in which you are applying for forgiveness. Now, an important note here is that under the new application, if you select 24 weeks, you can apply early for forgiveness. The only issue is that if you have an employee who you paid less than 75%, the percentage that you underpaid gets applied across the whole 24 weeks, even if you apply early. So for example, if you apply 12 weeks into your covered period, the reduction is still going to be multiplied by the full 24 weeks, not the 12 weeks. Next, we have our owner pay tab. Here you're going to enter each of your owners, the amounts that they were paid in the covered period, and also the 2019 compensation. Now, the 2019 compensation is a cap on the amount that would be allowed for forgiveness. There are different guidelines in terms of the entity type that you have, and I have included these below. So you will need to just reference here in terms of how you determine your 2019 compensation base. Next is a non-cash payroll. So this is just entering in your employer contributions to health insurance, employer contributions to retirement plans, and employer state and local taxes assessed, which you can enter based on the week in which you paid them. Next is your non-payroll cost. Here you're going to enter your business mortgage interest on real or personal property, your business rent or lease payments, and business utility payments for these various categories such as transportation, utilities, gas, water, phone, internet, and if you have any other that you believe will meet the criteria. Now, one thing to make a note of here is that these are amounts that must be paid during the cover period, or they can be incurred during the cover period and paid on or before the next regular billing date after the cover period. And the alternative cover period available for payroll costs does not apply for the costs you'll be tracking in this sheet. Next, we have the FTE calculations. Now, as I noted earlier, if you select that you meet the safe harbor requirements for no reduction in employees or the FTE reduction safe harbor 1, you do not need to complete the FTE calculation and FTE safe harbor tabs. These are for determining if you have any reduction, but if you meet these safe harbor requirements, you do not need to complete them. So if you do not elect those two safe harbors, you will want to complete this average FTE calculation. Here we are comparing the FTE as of the covered period to a reference period. The reference period for most businesses will be between January 1, 2020 to February 29, 2020, or February 15, 2019 to June 30, 2019. Now, obviously, you want to select the reference period that has a lower FTE to reduce your risk of having any FTE reduction. So you will want to look at comparing both reports. So once you've selected the reference period, you'll want to put in all the employees that you had paid in the covered period, and then also add any other employees that you may not have paid in the covered period, but they are included in the reference period. Then you'll want to look at applying employee exemptions. So I've included the exemptions here. So basically that is looking at any positions for which the borrower made a good faith written offer to rehire and was unable to hire a similarly qualified employee before December 31st. Any positions that you made a good faith offer that was rejected by the employee, any employees during the covered period who were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of their hours. In all these cases, you can include these FTEs only if the position was not filled by a new employee. So here you want to apply, if you have an employee exemption for any of these employees, for example, with employee name G, we're saying that this employee may have voluntarily resigned during the covered period, so they are an exemption, and we will want to basically add that FTE to your covered period FTE to eliminate any reduction for that specific employee. Now, if you find that your total FTE, average FTE for the covered period is less than your reference period, then you are going to want to look at your FTE safe harbor. Now, this is for the safe harbor number 2. So this looks at a similar comparison to what is in the safe harbor for the payroll costs. So it looks first at the pay period including 215 compared to the period from 215 to 426. If the period from 215 to 426 is still less than the pay period including 215, you can then look at a pay period including 1231 or the date of the application to see if that is higher than your pay period including 215. Now we're going to circle back to the Schedule A worksheet. So in here, the only thing we need to make sure is we're including all the employees that we had paid in the covered period. So you want to include based on whether they meet the criteria of Table 1 or Table 2, each employee. There is a control check at the top here to ensure that you've included all of these employees. So if either of these balances is more than 0, then you are missing employees from this. Once you've ensured that the control check is complete, then you are finished inputting all your information, and you can now look back at your PPP forgiveness calc and see the end result. So for example, here we can see a roll up of our $49,000 in payroll costs, which feeds from our Schedule A, which is a roll up of our cash compensation for our Tab 1 employees, our Tab 2 employees, and then our non-cash compensation amounts and our compensation to owners. Then if we had any business mortgage interest payments, business rent and lease payments, and business utility payments, they will feed from our related tabs. So in our non-payroll costs, they will come in. Then we have our wage reduction, which is based on our PPP Schedule A, which is our Schedule A worksheet. So any salary reductions here, which in turn feed from our payroll cost tab, will feed in here. Our FTE reduction quotient. Now for this example, we have a quotient of 1 as we have met the safe harbor requirements here for safe harbor 2. If you did not meet safe harbor requirements and you calculated a quotient that was less, that would feed into this first tab. Then we look at what are the potential forgiveness amounts. So here we have 3 amounts. 1, the modified total, which is basically the amount that you have paid multiplied by the FTE quotient. The PPP loan amount, and then the payroll cost 60% requirement. Now, this is the new 60% requirement that was introduced with the new Flexibility Act, down from the 75%. Then we have our forgiveness amount, which is the lesser of these three, which then gets reduced by the EIDL events to give you a total forgiveness amount. And now we have also included here your remaining loan balance. So this is looking at a comparison of how much you actually received versus how much you are getting forgiven. So how much you potentially owe back from the PPP amount. I hope that you will find this template useful in determining your forgiveness. If you have any issues or simply find this template very overwhelming and wish to go through it with us, you can contact us with our contact details, either via email or phone number here. Thank you for taking time to listen to this video. And as I said, I hope you find this template useful in assisting you with all your PPP forgiveness needs.